Yo, what's up, hometown and friends? Welcome back. I hope you're all doing very great. I hope you had a nice break. Time to start some shenanigans again. So if you haven't noticed, we've had a lot of chop throughout the election, and basically since October it's been kind of weird. Very tough to try to get in sync with something for like big home run hitters. It just hasn't been home run hitter season. So being very content with enough, getting your 40 ticks, 60 ticks, calling it a day has been absolutely paramount for day traders. So I wanted to come out and welcome you back to the fun that we anticipate to begin here soon. There's a lot of stuff going on geopolitically. We got Mr. T back. We got all the alphabet agencies basically getting dismantled. There's a lot of cool things going on. Stimmies, no taxes, a lot of cool things going on. So there's going to be likely a lot of movement in the market because there's going to be a lot of liquidity for the market to attack. So, that being said, you guys, keep it real. Keep it really light. Keep it really tight. You can this asset is such a blessing because you can get phenomenal returns with very little risk. When you got big, huge expansions coming, you could risk like $200 and make a month's worth of wages in one trade. But you got to wait for those. They don't happen every single day. So this is our daily chart in the NASDAQ. And you can see that, there are some phenomenal days, right? Like even though that this candle was kind of rude, it was still very wide in its range. So there's something for us in here. These days, these are not the fun days. Compression candles here, these are not the fun days. These are the days where, well, I guess there was something there. There was a nice trade there. And then you have, when we were in this expansion here, I was mentioning to my private students that don't let this fool you, because when it's a cakewalk to trade for especially like a week straight and the open low high close is just perfect, it's likely going to railroad all that confidence that it's built up in traders. And look at it, this isn't the open, that's the open. And then it came down and grabbed everybody and then closed way up here. Crazy. Oh, excuse me. No. That was the open. 769. Yeah, 771 right there. That was the open. Excuse me. It was this candle. That was the open of the candle. So even though it looks like a down closed candle, that was in fact the open, 21,200. So mind those when you're looking for your gaps. So last night in the update, I gave you guys these levels to have on your charts, minus this one here. That was created. That's the new week opening gap created this week. And it wasn't, there was no candles printed when I had done my update. So welcome back, everybody. Right on. So moving forward, we've got February, and I am really interested in a home run trade on Friday for PCE. It's one of my favorite news drivers ever, especially if the week cooperates with what we want to see. I know it kind of seems like if you're new here, a lot of what I say could be sound a little bit arrogant. And you'll notice that there's no indicators on my charts. I got some good news for you, even though you might not feel like it's good news, but the markets are rigged. And once you figure it out, it's pretty much game over. You just battle yourself into success. Or you crumble, because after you learn this, there's no excuse for failure other than yourself. So, as far as taking a couple of scalps here and there and just showing you guys in the private DM, contentment, proper execution, and then just being done for the day, you can get yourself some paydays. But when we're looking for home run hitters, we're seeking the news drivers on the economic calendar. So that's forexfactory.com/calendar. And you can like press that little golf tee on there and just turn on the red ones. Those are the ones we really pay attention to. Now, again, that's not to say that there's not trades on any other days. It's just that when we're looking for really, really wild price movements, it's typically on the high impact news driver days. So these were the levels to have on our charts. I'm going to go into a 5-minute chart to start with. And I would like to see price working its way back up towards buy side liquidity here. So if people are in short positions, which this is a pretty nice double top here, even triple top, very nice. What's wrong with that double top? There's nothing wrong with the double top. The problem is that traders don't pay themselves, especially if they play a standard Googled retail pattern and it's on side for them. They don't pay themselves, and because they're not used to being in such a profitable position, they'll just leave it open. And then, so if they're up a few grand here, right, and they just leave it open, they don't pay themselves, because the majority of retail doesn't pay themselves. Like, that's the thing. Everybody's got an ego trip, and you know, especially in the university levels, they're just like, no, you hold full pull, right? But anywho, they'll just be like, oh, look at all that selling pressure. Look at how fast price went down. And then they'll think that it's a sell-off. Everybody's selling off right now. That's the consensus, okay? But that's not really what's going on here. That stab down was a run towards the long liquidity. So the shorts right now, they're on side. Great. And, you know, they should be paying themselves. I mean, we pay ourselves, and when our partials pay 100% of the time. So I find it hilarious when traders will live and die by holding full pull, 3-to-1s, 5-to-1s, whatever. So I will be targeting these shorts for the rest of the day and into tomorrow. Now let's take a look at what happened from midnight. Oh, before I continue, you guys that are sending me your charts, amazing stuff today. Most of you guys felt it. You were able to get in sync with something. Everything was just really obvious. There was something for you. Even if you were just practicing, you were noticing that price action was favorable today. And it's a far cry away from what's been happening the last 6, 7, 8, 9 weeks, where most of our days have been very brutal in its delivery. Even though it would make an order block, it would railroad it and then go. Like it was just being really, really rude and fickle. Once the markets start to kick back in and the candles start to fill up in the lower time frames and all the PD arrays are perfect, that's how you know that you can trust what you're seeing developing in real time to provide you something. So good job, you guys. The guys that are not sending me charts, my private students, you should be sending me charts. I just want to see, where do you think price is going to go? Especially if you're new. That's the hump you got to get over. Be embarrassed. Be a student. So midnight, having a nice Asian range here. Let's check out the total amount of handles, 63. Kind of pushing it. So you had an open, low, high, kind of a compression. This is what I would expect for the rest of the day. Something drop down and then come back up to about the open of the day. So somewhere up in here. London seeing a run on liquidity in its respective kill zone, creating our model here, and then working its way up, back up to buy side liquidity here. So this model here is what I'm looking at to fractal into the day and into tomorrow. Well, here's the thing is especially if you're funded, you can only trade until 4 or 5 p.m. depending on the firm, which kind of throws things off because our end of day ends at midnight. So if we ended up getting up here by 5 p.m. and then at the open for nighttime trading after 6 p.m., then work our way up there, I'd still claim that target acquired by the end of the day, just because our day is midnight. So taking a look at what happened between 5 and 7 a.m., it's very important that we don't do a lot. And this is perfect. This is price not doing a lot in between 5 a.m. and 7 a.m. So that's great. Price then comes up. Just it's sweeping internal buy side is what it's doing. And look at the price point given to you from the night before, the lower quadrant of a new week opening gap. Swept up there at 9 a.m., created a bearish order block here, shifted structure here. The tiniest little, there's an indigo here, I would count that. Just a little gap here. And then, so because price didn't sweep this, I wouldn't have used this. Okay, if price would have swept this buy side liquidity pool up here, I would have likely turtle soup short or got into the money printer here. This one was a little bit sketchy, but at 9:30 opening bell, it came all the way up for this order block here and then closed back below. If you would have had your stop here, you would have gotten stopped out. All right, whether you took a partial or not. So if you were short on this puppy here, this thing offered 211 ticks before coming back up to what would have been your entry. Okay, so because this did not sweep buy side liquidity up here and left it a double top, I would have then been seeking opening bell for an entry because I'm running on time and price. Because price is not running or doing anything between 8:30 a.m. and 9:30, then I'm seeking 9:30 for the Judas. So it comes up, hits the bearish order block, and then closes. That's the sensitivity you'd want to see to engage in a short. So what do you have now? Well, you have a bearish breaker. So you can get short on this bearish breaker. It snaps back down to the new week opening gaps premium here. Little fair value gap in there in concert with that. And there's your unicorn. And she sunk right down to a price point given to you last night. Now, if you didn't see that, don't hurt yourself over it, because if it's running down first for the day, big dynamic, obvious run on liquidity, what are we looking for? Well, we as smart traders, we're not looking for price to just keep going, because we don't consider this a sell-off. We consider this a run on liquidity. There's stops down here. What kind of stops? Sell stops. What are you looking to be in sell orders? A buyer. It's the marketplace. You can't buy if nobody's selling. So there's a bunch of longs ready to sell their positions at a loss. They got their hands in the market out. They're saying, hey, my limit order's here. Come take it. And you're like, oh, okay. So this would be your turtle soup. Perfect. 10:05, 10:07, beautiful. If I go down to the 1 minute and that's 10:07, I'm not going to be surprised. So this here, if you were looking at this as your down close candle, cross-reference that with your 15 minute. The 15 minute was way up here. Okay, so it just not something that would be in agreement with you. Coming down, working in this upper quadrant of this new week opening gap here, it starts dipping down into here and gets a close back above the down close candle at what time? What time is it? It's 10:50. So we've got the hourly candles switching over now. So if you're in my private mentorship, I gave this to the group not as a signal. I gave it to them after the fact, just so that we're clear, because I'm not giving signals. You guys are to be self-sufficient. Once we hit this upper quadrant of the new week opening gap, and it was the macro for this hour, I then engaged with this, and the screenshot is in the thing. I took 102 ticks or something, and I shut it down. Took my payday. I'm not looking for home runs. I'm looking to just get a payday. I'm waiting for Friday, Thursday maybe, depending on what the week does. Right? I'm not looking to grab home runs. And as a matter of fact, when I sat there and I seen it keep going in the 15 minute, we'll get into the 15 minute here soon. I was just, I don't even want to sit in a trade. And then it did this all the rest of the time there. And I'm sitting there going, I'm so proud of myself, because I'm at the point where I don't feel any FOMO. I could forecast this coming because of lunchtime, and I don't want to sit through all this garbage. So if I take a trade with you guys this afternoon, it'll be in about 20 minutes. But that right there, beautiful order block on the upper quadrant of the fair value gap, executed perfectly, and just took it to minor buy side liquidity here. Little swing high in the 5 minute, and that's it. 2 contracts, 102 ticks or so, or something like that, minus fees. And like quota's made. Quota's made for the week. And it's Monday. So something for you guys to think about if you're struggling. Today is for my strugglers. There's no need for you to struggle. There's no need for you to chase price. There's no need for you to feel like you're missing out. If you get your hands dirty and you get in here, you're going to be able to take money out of these markets whenever the hell you feel like it. You just got to put in the time, put in the effort, beyond watching me like a Netflix show. and falling asleep to my soothing Canadian maple voice. You got to really get your hands in here and understand what's going on. It's rigged, it's a slaughterhouse, and you don't need any indicators telling you what to do. Now, if you use those, I'm not knocking them. I'm going to teach you when they're high probability. Okay? I don't knock pattern trading. I don't knock indicators. I make fun of specific ones because they're funny. But whatever you're doing, you'll find something in here. So you just overlay what you're doing with what I'm doing. And you'll have at least a bias. And then, if you're using, let's say, divergence here, well, you know that you're looking for a specific model down here, right? Could it be a bullish engulfing candle after a dump? And then there's your divergence here, and there's your bullish engulfing candle. Could you use that? Could you use the swing low here or something after your divvy? Yes, right? If you need a visual, don't just toss it in the garbage, but at the same time, I just got my watermark here. It's my indicator. So we got 1 more minute until the macaroni begins. And you can see the precision offered here by these specific levels. So what would we be looking for? Well, personally, I would like to see a run on buy side. So if that's the case, that swing high right there, in the next few minutes, will get blown out. We'll see a fair value gap. It'll close above the red line here and then start making its way up, if it's in our favor. There is the chance, because the PM session is a baddie, that it runs for this fair value gap first and then flips out. 15-minute time frame, we've got our new week opening gap. Very cool. To the upside, which is great. Just, I like that it did nothing. So like it did the majority of nothing, even though there was kind of it was over 40 handles, which is easy, like, whatever. You use discernment, right? And then London makes a shy run, definitely not 1/3 ADR run. So this accumulation range in here is just singing a beautiful tune right now that we are likely going to flip out. So when we got that and we got our first draw, and this creates the SR flip to the downside, everybody will be, outside of what we're doing, everybody will be bearish, looking for continuation models, and then we'll look to railroad those guys. So 15-minute time frame this morning. So this one was kind of a bugger. I'm with you. And it did take internal buy side. So it did do its job here, okay? When you've got a gap risk of, let's say, 36 ticks, and you're going, okay, well, there's a double top. Okay, so this would be sketchy. This would be absolutely sketchy. Now, you got to think in the future. It's chess moves, okay? If you see your model and it's taken internal liquidity, but it hasn't taken this one, you can likely trust it more than if it took this. Why? Because this and this little setup here would generate more shorts for them to railroad later. So this happens all the time, where it will take this high, or even if there was another high here, let's say that this guy was here. Okay? Let's say this guy was right there, and price would come up, take that high, but not this one, and generate some more shorts for us to railroad later. That happens all the time. So if you see your model in an internal liquidity sweep, because that's a swing high in the 15-minute, that's the rule, you can, in fact, be very cozy in this trade. Now, when you're measuring your gap risk, you're going, well, this is 50 ticks here. This is 36 ticks. And that's 100 ticks. So, yes, you are running the risk of getting stopped out because of these equal highs here. You absolutely are running the risk. This is why you put up risk. And this is going to be something that flies over the head of the beginner trader. This is why you are putting up risk. The trading should be called risking. That's the proper definition of trading, is your ability to manage risk. That's the secret to trading. So let's say, for example, that you had a stop of 36 ticks here, okay? And this candle came and tagged you in. Oh, sorry, excuse me. I guess that'd be 77. That candle did not. Okay, so this one closed below. 2 up close candles. So now you got 44 ticks to the top of this candle and 80 ticks to the top of this candle. So let's use 80 tick stop. This guy tagged you in. And now you'd be aiming for this double bottom as a payday. Okay, this is your payday. That's 161 ticks paid. That's a partial that paid you 100% of what you took out of the market. Now this bugger at opening bell came and tagged you out. Guess what? You're paid. That's the importance of paying yourself quickly. It's not about you tagging this entire home run, because you know what? This is going to do this. And would you rather be paid or would you rather not be paid? This is going to happen constantly, all the time. So you got to make a decision. Do you care if it runs without you and you get stopped out because you don't want to take a partial? Which you totally will. You'll be crying. You'll be like, oh, it ran 1,300 ticks and I wasn't in it and I didn't collect nothing. Yeah, it might feel like a kick in the gut, but at least you'll be paid. That's the whole idea. That's what you're here to do. You're here to trade and pay yourself. You're not here so you can come and show off your home run win to me. You're here to make a living. So if this was to happen, and it does, and you were paid, congratulations. Now, let's say you did get stopped out after you got paid. Let's say you moved your stop to your entry and bang, it tagged you and you're like, dang it. Well, how would you engage with this market? Again, how would you be able to engage with it? Well, you could tell yourself, I'm paid. I made 3 days worth of wages at my job. So I'll just be content there. Great. Absolutely. Be content there. So let's say you made $600, a little more, but we'll just say 600. And now you're going, okay, well, I risked 400 to make that 600. So now you can be like, well, I'll take the 200 and not even risk my full base risk, right? So you're going in with your second trade at half of the risk, not doubling it up. Because if you catch this sucker, and this is what I was saying from before, you can do very, very low risk trades and make good money. So you've got this high here, and you've got this low here, and then you got this higher high here. So this at the time was looking like a pretty good bullish breaker, but it failed. So it's showing us a willingness to want to trade lower. Now, if I turn off the wicks, which I do when I'm looking for like trend basically, I've got a low here, and if you just zoom that a little bit, you can see that price has made a higher high in here. Okay, so you got your low, higher high, and now I'm looking for a lower low. So you can see how this low here is lower than this low. So I'm going to use this low as an entry technique. And that's your bearish breaker. Price then comes up. So it's after the stop out, it shows us a willingness here that it wants to go lower because it closes below up down close candles, snaps right through it. Then we can use that as an entry technique, and that's your bearish breaker. That thing sinks it right to targets, right through the new week opening gap to the old week opening gap, and hits the upper quadrant, and that's it. So that's your 15-minute bearish play today, and your 15-minute bullish play. Now, for my private students, if you haven't caught on, if I'm in the lower time frames and I'm posting you guys a trade, seek the 15-minute and use that as a bias. Okay, so I'm not giving you a signal, but I'm tipping my hand to you. Because a lot of the times you can forecast these coming. So this one was really weird, okay? It landed inside of the rejection block. So you can use the upper quadrant, you can use the midway point or the lower quadrant. Like you can, and this is where your risk comes in. How much gap risk are you willing to take on? So it closed above the upper quadrant. If you were using that as your entry technique, 67 ticks here, 179 ticks to the low there. These candles all have tails, so you could be, and it's a swing low as well. You got your higher low, lower low, higher low. So this thing could launch, right? So you're measuring how many ticks it is until, what's your threshold, basically. Because if you're in with, it's like a $900 stop almost with one contract. So you would have to drop to micros if that was beyond your base risk. What's a base risk? Well, if you're in a funded prop firm account, basically you're taking your drawdown that they permit you and you're dividing that into 20. And that would be your base risk in dollar value. So this one might not have given you an entry, might have been a little weird. However, I want you to notice how price comes above the new week opening gap, takes out a short-term swing high here, leaves a fair value gap, actually two fair value gaps, and then starts using this as support. Very good. So bullish bias kind of intact, I would say. And then what are you waiting for? Well, you're waiting for price to show you sensitivity. So if you were sitting here waiting very patiently for a position, what would you want to engage with? Well, that's going to be different for everybody. This 15-minute fair value gap here would be perfect, but it hasn't been down there. And is it a breakaway gap? Will it go down there? You kind of never know, right? But because your order flow skills are superb, you're going to give it its opportunity to show you its hand. So it comes down and finds support on the new week opening gap. And Fipsy, this one's for you, bro. Okay. Now, this candle closed back above half of that candle, showing some strength. It's killed the sell program. It's hit the rejection block. The next candle finds support on mean threshold, closes above the down close candle, and there you have it. Is there a setup there for you? Could you deem this salient for continuation? Maybe you executed, maybe you didn't. It offered 184 ticks. There's nothing wrong with this. But 70 ticks just to the swing high. There's nothing wrong with that, but and this is for others, as a beginner trader, you'll think, oh, that sucks. Like, look at how much tick value there was in that big run. Here, if you weren't a part of it, then you weren't a part of it. That's just that simple. Then you sit and wait for the next opportunity. And if you were patient enough, there are others. You don't have to always be a one-trick pony. You can use your skills to just get paid. Because if you miss this, you're not looking for this. It's gone. You're just looking to get paid. Okay, so very good. Comes up, sweeps, takes that, sweeps this candle, great, eventually, and then comes back down. And it's now lunchtime, so you're expecting it to do this. Like, you're counting on it to do this garbage at lunchtime. Look at Bitcoin. It's violent garbage. It's finally going to go up now. It came down for another 786. Every time. So currently bouncing in between new week opening gap premium, new week opening gap discounts, that right there. There's two fibs here. I think there's a macro fib and we're sitting at equilibrium. We do have a breaker here, high, lower, low. Some of you guys are really having trouble with breakers. It's you're overcomplicating it. Okay. Just gonna dang it. Hold up. I got 8 seconds to load up my account. And it takes forever. That would have been my entry. Nice. Nice. A little bit late on that entry, but whatever. So I'm going with one contract. I would go load up my account, but the connection glitches out sometimes and it shows my personal name, and I'm not really down with that. So I will post these to Twitter. I'll post my executions. And so the logic behind this is that it just made the lunchtime box here. And then it came down and swept this sell side liquidity pool here, and then closed above a down closed candle. So I'm just going to hit it, not worry about it. And if I get stopped out and it comes down for here, I'll try again, because this is our breakaway gap as of now. Back to the breaker. So we've got our low here. Remember, I'm taking away the wicks, right? I'm not counting the wicks as the lower low. This would be the lowest low out of the set here. So it comes down, you get your low, high, lower low, and then it makes a higher high right here. So this entire up close candle here, I'm looking for support. And that's our bullish breaker. And we've got this 15-minute fair value gap in there, which is our unicorn. And we could, in fact, seek that before going up. Boom, I got stomped on. So my stop was right at half that candle there. And I'll try again. if it's permitted. Hold, what? What just went on? Holy shnikey. Living like chess. Ooh, thank you. Wow, you just got the record. Uh-huh. Yo, that's amazing, bro. Thanks, man. I take it you're doing very good. That's awesome, bro. It's funny because this is his model that we're playing right now. What do you say, buddy? One more dip? And then rip? Reggie, what's up, bro? Thanks, Offnear. Wow, that's amazing. God bless you, Ryan. Thank you. He's like already in. You're in a short? Crazy. Crazy. So you're gonna short and then long it? Or are you just short now and you're aiming for the double bottom? Crazy. So I bet you Ryan, sorry, living like chess. I bet you nailed that, didn't you? I bet you that's his entry. Shark fins, bunny printers, flamingos, and banana 200. Hey, what's up, Sniper Meow? Lunch low target. Oh, I see. You're going way down here. Okay, sweet. Let's do it. Sweet. And that would hit our breaker. And maybe we dig into this. When I went long, you were like, oh no. And then it snapped in my face. That's awesome. What's up, Bass Couton? p.m. order lock. Well, there's a lot going down in here. Like, there's a propulsion block in here, bro. There's some things going on in here. Yeah, I'm down with it. Ryan's just playing his model. Remember, you guys, there is no right or wrong. Like, there is only profitable. That's all there is to it. Like, you guys will be able to find shorts inside my longs or vice versa. Like, 15-minute. Yeah, man. That's what I mean. We got this for support right now. That's why I was interested in it. I took my shot. Whoop-de-doo. My tiny little loss is not going to destroy me. like it does to beginner traders who just, I need to get it. This has to be it. My whole entire life depends on this trade. Just wanted to hop in quick and say thanks for introducing me to all of this. Have to run now though. Wish well on you all. Stick with it. God bless you, Live in Light Chest. Thank you so much, man. You're so blessed, bro. That's cool. Thank you. So cool. That's how you do mic drop on the internet. Attaboy. Bitcoin's getting the sauce we want to see here out of the NASDAQ. Ooh. Ooh. That's hot. Unless it shows me otherwise, this is where I would like to try again. Oh, it just took internal sell side here. And Bitcoin and NASDAQ are moving together quite nicely. So the market symmetry is coming back, you guys. This is going to get so fun here. You guys have no idea. I sit here with my head in my hand. Like, you guys have no clue. You guys have no clue how much fun we're going to have soon. And it doesn't even matter. Up, down, who cares? Now, there's no shift in structure. There's no fair value gap. There's no proper model here. Like, there is an implied fair value gap. There is an indigo right, little more, right there. So this candle has no wick. So we're sitting here studying, and this is where you guys gotta slow down on the adrenaline, because this is where it kicks in. You'll lose a trade, and then you feel like, okay, it's going to do something. And you got to get in right away. Just relax. Just relax, because in 20 seconds, if we make a swing high here, that will be our market structure shift if we take it. Right now, that's it, and that sucks. Oh, I was really hoping it didn't give it a wick, but whatever. We'll take it. 5 seconds. So now we're sitting here in our liquidity runtime, waiting patiently for the thing. Okay, Bitcoin's already doing it, so we'll see what happens. You do. Everybody does. This is where this is where the logic goes away. At this point right here, you take a small loss, and then immediately you feel like you need to get back in just because, oh, I need to go flip bearish now because it stopped me out that way. And then you're getting stopped out as it's ripping. And then you're like, oh, I should have just bought the dip. Like, it's a psyop. And now you've become a reaction to price instead of anticipating what it would likely want to do next. All right. Liquidity run is between 2 and 3 p.m., bro. And the macro is what gives the run instructions. See, if you're long, boom, you're just like, oh. But now we have made a swing high here. So now we'll wait patiently. We still got our unicorn down here. I'm looking for something specific, and I want the candles to be in agreement with me. A 230 false run. Yeah, it's at 130 typically it starts, yeah. And this is that new week opening gaps premium here. No wick on this candlestick. Perfect. This is that 1 minute candle down in the discount that had no tail on it. We'll use that later. The harder that this price, like right now, it's generating the idea of support. The harder that this price runs to this, the more interested that I'm going to be in it. So I'd like to see it not touch the blue box first. And just run right here. So that's the new week opening gap. Now, we need to see sensitivity if and when we get to that red line. Meaning, does it rush to the purple box below the market, or does it start reversing? So 20 seconds. I don't want to see this up close candle broken before we touch this. So now we have our new swing high here. That's our shift in structure, or presumed. And I'll just snap right through that up close candle and come run to my point of interest. Erg. So now that it's done something I don't want to see it do, if it leaves a fair value gap, I'll try again. If not, I'm still interested in the red line. Now it's left a double top. Love it. Snap down. Run them. Yeah, baby. And Bitcoin's losing it. Ah! NASDAQ is being a sick sister. So no fair value gap. There's no gap in between these two candles here. I know some of you are going, yeah, but if you use the volume imbalance, there is. All right, touche. You got me. There's a gap. Lame. But maybe not. So if we make our model in here, I'll give her another shot. And this one I'm going to crank the leverage. No, I'm just kidding. But my first trade, low risk, a loss. My second trade, a little bit more risk. Now, why is that? Because I was up here getting in sync with order flow when I took the loss. So no big deal. But now I'm in a discount getting in sync with order flow. So if it's permitted and it starts doing what I want to see it do, then great. Maybe you're used to taking an L your first trade and then you win the second one. Wink, wink. So that would be a beautiful entry if I wanted it. I don't want it because I want to see if it does, in fact, want to get that red line and the 15-minute fair value gap down here. See how I'm really picky, you guys? Very picky. Hit D-shuffle, I just lose them all. Bro, be more picky. Be more picky. Why are you letting these things punk you? It takes a lot of time practicing not revenge trading to not care to revenge trade. No, I don't do crypto here, bro. You gotta actually sit in the room with the demon. Offer him a drink. Tell him to take his shoes off. And only then will you learn what it's like to not destroy yourself. The demon is FOMO, contentment, self-pity. Nobody else is going to cheerlead you. You got to do it. So I like how this has no wick on it. That guy right there. Oh, right. Do I think that crypto price acts differently from established markets in price action? Well, I'm not sure if you're part of the Crypto Life or Discord, but yes, absolutely. Crypto and altcoins primarily, they are a commodity. So there are supply and demand like features, right? It's not exactly rigged down to the tick, but Bitcoin, I would argue, is pretty dang rigged down to the dollar. But as far as Ethereum and altcoins, look, you will find that these tools here work really well in the higher time frames, but it's got to be in the right time. You see, altcoins go through periods of stagnation and boredom. Okay, but when it is time for price to run, which is once every 4 years, wink, wink, then those things you learn here become, in fact, very precise and fun. Okay, so, that year is this year, as luck would have it. So, yeah, so that's the sensitivity we like to see right there. I'm going to see if we hit the top of that gap or something. No, that was it, eh? Okay. So, if we can make a fair value gap. Well, it can't do that. It can't come back down. It's got to be a nice strong close. The one that makes you FOMO. The one that goes, oh, I'm going to miss out if I don't get in this one single candle because there's never going to be another candle ever. That one. I'm not there yet. That's not FOMO yet. Bitcoin's rigged as hell, so you'll have a good time there. And it doesn't, altcoins are designed for long term. Like that's their, if you want to make money, walking around money, you just hold for a long time and you'll get, it'll come to you. But as far as trying to day trade, just stick to Bitcoin. It's a freaking giving tree. So no shift in structure yet, although we do have this very clear fair value gap. So this could be our breakaway gap. Did we make a lower low? No. So this would be our mitigation block if we can get through this guy here. Just show me some proof and I'll be happy. Gold? Yeah, of course gold is rigged. That's like the most violent rigged asset in the market. It's gross. 10 more seconds here, and if I see my little thing, I'm going to hit it. Right, one more. Wait. Don't do me like that. Oh, you bugger. Dang it. Missed my entry. It came for this little bugger here. Ugh. Okay, so this happens. Okay, it happens. Remember we were going to save that for later. Five seconds. And we got one more minute for the 5 minute. So I'm going to flip back to this here. So that was first try, and this is going to be second try. Man, a lot of the times too, yeah, I was just going to say it'll just take right off, bro. See ya. And we got the 4 retarded soldiers here. I can't remember if that was continuation or reversal. Oh, what a lazy close. So that what I delineated there with the fibs, that's the wick of the candle. So if it drops into consequent encroachment, the midway point, I would then be interested. Read one more. Boop. Now I'm going to measure my gap risk. So that's only 35 ticks. That's only 59. So yeah, it's either in my favor or it's not. $604.75. Low hanging fruit. And then these guys right here. Well, let's see. And if I get stopped out of this one too, oh well. Sucker punch it. So this right here was the 5 minute down close candle. Right there. So I was interested in the wick because it closed just outside of the wick. So essentially we hold this guy and I'm home free. Now we got to cross-reference that with the 15 minute. Where are we? Oh my goodness, we got to get all the way back up to targets before the 15 minute gives an entry. Great. Let's do it. Or I get railroaded and it's all Dave Roy's fault. I just want 95K in amount. Dude, because you want it so bad, it's not going to give it to you. Now it's diving. That's funny. Way to go, bro. Oh, man. Hey, what's up, J-Big? Master Friend, do you think gold futures is rigged? It's all rigged, buddy. Welcome to the markets. Can you use the things you learn here in crypto? Some of them, not all of them. Basically, man, you don't need any of this stuff. You just need people's stop losses and then hunt the cup and handle. That's literally all you need, man. Like you don't need anything else. Like the cup and handle will save you. It'll feed. A buddy just told me in the Discord this morning. He's like, bro, your model feeds me. He just plays the cup and handle. It's Sam's model. I just tweaked it and made it really super dope. That's all he does. That's all I do. I don't look for anything else. I'm not looking for order blocks. I'm not looking for fair value gaps. I'm looking for stop hunts and then the money printer. That's it, which is in my free mentorship playlist. It's my gift for everybody on YouTube and in the Discord. You just gotta go and learn how to hit it. Practice it for a while. That's all. So this is boring and annoying, and I'm gonna step out for a minute. Be back. No, I'm busy, buddy. All right, that bugger tagged me out. Great. Losing trades on the live. How do you guys lose?
I need the nail clippers.
Here, give these to mommy. And now we're in the red point. Oh, after it made my model. Okay, cool. Cool story, bro. So I got one more shot ever. Yeah, word up. It's not going to stop me from hitting my model. I don't care if it loses. And that's like the biggest thing between people who are making it and people who aren't making it. You can't care if you lose. You got to invite it. And of all your back testing and all your risk reward models, if you're playing a 3-to-1 R, then you're permitted to lose half your trades and you'd still be up. So you know this. So why are you upset when you lose trades? Right? Why do you feel the need like, oh, it's bearish now. It's got to be bearish. It just has to be. And maybe it is. Maybe that's a breaker. Maybe that's a unicorn. Or maybe we save it for later. Who knows? Remember, I'm not reacting to this price. I'm anticipating it wanting to come reach up back up to these equal highs. Right there. Minor buy side. In the 1 minute, it looks like a lot of range, but it's not that much. Oh, 73 people. That's awesome. Oh, 71 now. Bye. Hope you had fun. I know it's boring, eh? Trading's boring. These guys are about to stone me to death. What do you mean trading's boring? How much fun are you having right now? This is trading. Welcome. Now, PM sessions are rough. It's like you could see a continuation of the move from the morning. You could see like an all-out, just incredible Hulk level reversal, or just chop and nothing, or both. We've done both. We went continuation and reversal. I had one student, he's very young, and took him on, and he's in school, and he's always coming after school and showing me his charts, and he's like, man, Bitcoin was so flawless today. Bitcoin was so flawless today, and then he gets a week off of school, and the whole week is just horrible. And he's just like, this is the worst trading week ever, and it's the one that I took off. Of course, right? That's typical. It's just like the day I go live with you guys, of course I'm going to lose trades. It's typical. BTC is diving. What's the first condition to every trade? Anyone? That's right. That's right. Stop hunt. Yeah, Clove Hitch, you outdid me there, yeah. Yeah, +1 Clove Hitch. Time. Good job, buddy. That's awesome. It's got 3 more minutes to get down in there. I swear, if it does the model again before it touches it, I'm gonna be with you guys, choked. Watch BTC just snap in everybody's faces. This is gonna be funny. 5 seconds. Why you gotta do me like that? Two more minutes, or like 1 more minute actually. What's the unicorn? He says. It's the one that pays you when it shows up and you don't have to question it. You just hop on and it takes you places with fairy dust. Unicorn fart dust. Yes, Lydia, I'm on the 1 minute time frame looking for the thing. Yeah, breaker with a fair value gap in it. It's dope. Well, Bitcoin was looking fun for like 2 hours. Then it robbed everybody on a turtle soup. I can't stop laughing when you just say. All right, macaroni time. Let's go. So I'm going to measure the gap risk of this candle. Buddy's going to eat the consequent encroachment. That's 35 ticks. So 70 ticks. Not bad. Ooh, harder. Oh, is that it though? Is that actually it? And this is what is terrible when you're waiting for something like this. You're waiting for your thing to get hit, and then it will do the thing like it did here, and then collapse. This is why you put up risk. Wow, that was a nice stomp. Oh man, that's my favorite to get into. It looks like it's gonna moon, but I don't want to touch it unless it touches the purple box. What do I do? Full port right now. Just kidding. Man, that is a tough call. Do that again. Don't give it a wick. Dang it. Right at the last second. Ah. Yes. Yes. Stomp on him. You ready, Lydia? Trading is boring. It's like horse races here. Which horse is going to make it to the box first? So it's showing some strength in here, which is nice. Dabs into minor buy side, runs into sell side. Do it. Oh, that was a boop. That was a minor boop. Come on, give me some dig. Oh, 5 seconds. What's up, bro? I know, right? The suspense. Uh, uh, uh. Boop. I would like to see one nice sharp stab at least into the upper quadrant of that gap. One more of those would be nice. And I will soup it. Right there. Bang. I'm in. And if it runs me out, that's fine. Stop loss. Just right down in here. Soup is on. Soup is on. So 17 seconds, and if we don't take this high, could use that for our structure shift. This up close candle here, because I'm bullish, I want to see this candle railroaded quite viciously. Otherwise, it will use it as resistance. So take out the low there, and you're just kind of using that level as a measuring stick. Really, it's at the moment, it's this candle here. But this one's bigger, so I choose that one. Well, it was looking so cool for a minute. 4, 3, close back up there. Dang, it's showing weakness. It's coming for me. Oh, that was close. That was really close. Lydia, save me. Throw me the rope. We need to get back above this candle and we're good. Maybe. That's not good. If it's not this candle that closes above that purple box, I'm finished. I'm ruined. Gonna have to take another 6 weeks off and study. Hey, I'm up. Sweet. Oh no, back down. This is hilarious. Ugh. I went right up to that candle, too. Like, come on, do your thing, chicken wing. Lame. Should I take my 7 ticks and run? Book it. Just gave you $100 so you could reset your email. Sadly, I don't have any of those. But that is hilarious. Oh my goodness. Do you see what just happened? You all seen that, right? The bid and ask was above and the candle was down. Uh-oh. This thing looks like it's going to run me out. So that trade that I took this morning is basically covering this PM session. I'm slightly profitable today. I'm basically at break even right now. We're gonna be dang soon here. Man, everything was so great. It looked like it was gonna do everything that we know and love, and then it just didn't. This is what happens. Tomorrow, likely I'll be able to, and Friday. Like, Friday's gonna be really fun. Crazy. Oh my goodness. Still in the game. If this launches, I'm gonna laugh. I would like to see a little piece of this fair value gap open. It's like adding air into it's like turbocharging your play if it stays open. But man, it looks so great. Boop, tagged. Bagged and tagged. Well, that's how you be a professional loser. Go find that on the internet. It doesn't exist. So, I mean, offside for now. Maybe it does something cool later. Sitting inside this breaker and in this unicorn, I gave it a shot. It walked on me, and I couldn't give a flying rat's ass. And we're breaking below the midway point. Back down to our wick. And another discount fair value gap in here. So moving forward for the day, I am looking at price to want to move back up regardless of it coming down here right now. It will likely want to seek this. You see how we have these equal highs up here below the new week opening gap? That's bait, okay? It's mega bait. I'm telling you, price is going to be up here by the end of the week. So have this on your charts. Buy side liquidity coupled with that new week opening gap. That wick coupled with this fair value gap here in this order block, I'm fairly certain that's where she's going to want to pounce from. So let's take a peeky poo at what happened in here. So order flow looked really bullish, and it looked like it was going to want to continue. It snapped below the up close candle here, coming back up for a retest in here. This candle closing below both these up close candles, and because I was looking for a reversal, I was offside. Okay, yes, sure, I was wrong. I lost a couple trades for the moment, right? Was I really wrong? We'll find out tomorrow. But as far as engaging with price for the run up here, I was completely offside. And now, oh, you know what, man? Do I pull the one shooter? Do I pull the one shooter out? Let me check. I always got a one shooter in the safe just in case. You know what I mean? We'll see. Anyway, back to this guy here. So first try, minor sell side sweep here. Got in sync with an order block. It failed. That's okay. Candle closing inside the fair value gap. Looking for a nice strong move out. Looked like it for the moment. Didn't do it. Whatever. So this guy, is it this guy here? And all these should be red. Okay, so order flow being very bearish and in my face. Diving into the gap here. This is partially why if you seek the 15-minute only, you'll get a lot of less false signals. I know you'd be like, take your own advice. Well, I was looking for something different today. But as far as the 15-minute is concerned, it pushed it down into its respective discount. And that looks pretty sweet. So the 5-minute, now look at how false signal here. False signal here, and then of course my turtle soup getting railroaded, whatever. Just a lesson to be learned there, how the 5-minute can trick you. You'd be thinking it's ready to go and it's not, and that's okay. It happens. And that's about it for the rest of the day, you guys. God bless you all, and we'll see you tomorrow. Thanks for joining. Peace. With the knock on your soul.